Hello, trading has closed on June the 1st, 2017. My last call was that unless we gapped outside of the day's range, I expected a market that closed a little changed. Well, yesterday's high in futures, you have to use futures for this because the S&P doesn't have all its elements open at once. The high was 24.15.25. We opened at 24.16, so that's a gap outside the day's range. And before the open, the call is killed. Even if I don't say it, that's one of my standard rules. Gapping sharply in the undesired direction, in this case out of the range, kills the call before the open. I was looking for a daily pattern that had an early high and a low around lunchtime. That's what happened. The daily pattern tomorrow, I suspect, will have an early high and a late low. And while it doesn't have to have a negative close, it tends to have a negative close most of the time, particularly when it happens on a Friday. Let's see what the MEJT system had to say. While the market was going up like this, it said this move was a false move, and that after this time, we'd see the price indicated by this blue line, and the white dot says that we did, and there was support under that price. No new MEJT calls for tomorrow. It's an intraday system. Well, let's go over the positive and negative aspects of today's trade. It's positive when you gap up, hit new high after new high, and you keep on hitting new highs in futures, indicating prices over this high will print. Doesn't have to print tomorrow, but it's a strongly positive move. If we keep going up, the target I have is 24.77. Now it's very hard to stand in front of a move like this, and it's very hard to make a prediction right in front of the non-farm payrolls report. But let's see what happens if we don't continue straight up. First of all, it's not good that we have a wall into the close. Straight up, no pullbacks. And it's not good that we close at the exact high of the day. This almost always indicates purchases by weak players. It tends to be followed by gapping down, often sharply, when the market reopens. It only works half the time when you hit new highs. 50-50 isn't very good odds. But even though the newspapers and radio were saying about the new highs, they weren't. It was a new high close, but not a new high print, and that's what counts. There's also a rule that sharp moves like this right before major announcements, like the non-farm payrolls report, tend to be in the wrong direction. Let's go over what's negative about today's pattern, with the caveat that if we gap up smartly tomorrow, everything I say isn't going to be worth anything because the call's canceled. Here was our DeMark count. This was an ersatz bar 13, but we got bar 13 for keeps today. So on this chart here, the daily chart, we now have a combo sell signal. Now these indicators have been around since the early 1980s, and they worked great for a long time. In the recent rally, they have failed many, many times. But just remember, if they fail in a large way. But if they work great. It doesn't have to work immediately, but in my experience, the signals that pay off really pay off quickly. If you have to wait around, it isn't as good a call. the really good signals take out this TDST line within 3 bars. It's hard to see that happening because that's 2283.65. So unless we get something unforeseen happening, it'll be a drop, but not a big drop based on this. But it should be tradable if this high holds. In alignment with that, we have bar 13 of a sequential sell on the weekly chart to go along with bar 13 combo sell on the weekly chart. Any close over 2405.77 tomorrow gives us bar 13 with no fudging. That's the sell. Even if we do close under this, it just means the drop has begun because the last bar can't finish early. This weekly formation started 6 months ago, over 6 months ago. Started way back here in early November, so we're talking almost 7 months. When a formation takes 7 months to form and it works, it should last months on the downside. So we're at a very critical point. If we keep going up, it means the DeMark stuff isn't going to work. The actual stop losses are based on closing prices only, but this particular price is an exact, pretty exact, within a point, price target of a friend of mine's system. We have a direct hit of a Fibonacci target of a prior consolidation. We have the Hobson close. We have the wall into the close. If the DeMark stuff is going to work, even though the rules don't specifically say it, I would expect it to work right away, ideally with a negative reaction to the non-farm payrolls report. If it works when the daily and weekly signals are in alignment like this, it's a perfect formula and DeMark's work for a mini crash. So if we start dropping, I would believe it. If we start dropping, it should last all day long and continue at least for a couple of weeks and probably months. My timing system had a change in trend on June 3, that is Saturday, so that means either June 2 or June 5. The close of June 1 and the open of June 2 is the same to me, so I'd like to see us, if this is going to work, I'd like to see us drop smartly right from the open by gapping down sharply, and I'd be kind of suspicious of anything less. Gapping up smartly kills the call, even though by DeMark's criteria it's only closing prices which count. So we're looking for a market tomorrow where the open's going to be critical. We have a chance for a major top here lasting months. All we need is confirmation, but if we break through, it's a big failure and we keep railing. Based on the poor breadth, I think it's going to work, but we'll know for sure soon after tomorrow's open, and that's today's call.